All right, everybody, welcome to the watch list of the week of June 2nd. I'm excited. I'm excited for this week. Got some interesting stuff coming up. I'm actually in the wrong dates here. I meant to scroll up, but it's NFP week. And so non-farm payroll is the employment data week where they tell us the employment numbers, and that drastically affects the stock market. Like drastically, it's probably the biggest market moving event that we have in the news is non-farm payroll, and it's always the first Friday of every month. So we open up a new month here in June. So this Friday will be non-farm payroll, but it starts with Monday. And Monday we have PMI and we have ISM manufacturing. Two events right there that could give you a little boost in the market as far as energy, as far as volume goes, but nothing like too crazy. But regardless though, a little tip is that on non-farm payroll weeks, the Monday of non-farm payroll week is typically a day that we try to get involved in the market and make some trades, because Monday of non-farm payroll week is usually a good day to trade. Not every Monday is a good day, every Monday is a good day to trade. So it's almost like the second, third, and fourth Monday of the month is usually not that great. But something about that first Monday is solid. So we're gonna be looking to get involved tomorrow for a fact. So I'm excited for that. Tuesday, nothing too crazy. Wednesday, usually that ADP number gives a little energy to the market, but nothing too drastic. Ultimately, Tuesday, Wednesday, and Thursday are days where you may see some movement, but nothing overly crazy. The big market moving event is Friday. It's Friday. There's also a lot of manipulation that goes on these 3 days, Tuesday, Wednesday, Thursday. So I want you to be careful. The movement could be very volatile. It could be very back and forth. So you gotta, this is the weather report. Remember, we said we come to the economic calendar because it tells us, it's like a weather report. It tells you the best days to be involved in the market. So Friday is like the sunny day. This is the day you want to be outside, you at the barbecue, you at the pool, you're doing your thing. You probably don't want to plan your biggest plans on Tuesday, Wednesday, Thursday. I'm not saying you can't go outside, but definitely bring an umbrella, have safety, have stop losses, do what you got to do to make sure that you keep yourself safe on these volatile, windy type days. And Mondays should be solid. Monday's like 75 degrees. You know what I mean? Got a little breeze going. That's Monday's vibe. So that's the weather report that we have on the economics, as far as the economic calendar goes. And so now with that in mind, we can take it to DXY. All right. So what we do in these watch lists, once again, is we try to gather sentiment across the market. So we check different things. It helps us get a gauge on what the mood of prices, what direction we really trying to head in. And DXY is something we use because typically DXY and the NASDAQ move inversely for the most part, right? It's not a super like precise thing, but largely I noticed that if DXY, the dollar, is going down, then the market has a tendency to move to the upside. And sometimes DXY moves first. So sometimes DXY shows its hand before it actually shows in NASDAQ's price. So what I'll notice is there may be some days where DXY is moving down, let's say 3 days in a row, and the NASDAQ was consolidating. And then out of nowhere, a news event comes out and the NASDAQ bursts to the upside. But DXY for the past 3 days has been shown is that it's been bearish. So if the DXY is bearish, then NASDAQ being bullish was the expectation, and that's what's been happening. So even here, right, this is an example. I don't know if anybody saw Friday's price action on the NASDAQ, but Friday was extremely bearish at first, and then we had a crazy reversal in the last hour of the day. That 3 o'clock hour was insane, y'all. If y'all haven't seen it, but we'll be checking it out in a second. And so, but if you notice, look at Thursday's candle and look at Friday's candle. They were both trading to the downside. In class, to my mentees, when we were in class, we targeted this wick on this day. We said, yo, well, DXY will be coming here next. So we already knew DXY was going to be bearish. And we actually had the expectation that the NASDAQ would be bearish as well, which is strange, right? So if somebody's lying, the one that's lying is typically the NASDAQ. Usually, if you have something like that, usually if they're moving the same direction, the one that's telling the truth is the US dollar. So as y'all seen, yeah, this was moving down. NASDAQ was simultaneously moving down. And then y'all seen what happened on NASDAQ in the afternoon. Crazy rally, S&P 500, crazy rally. That's how it works. So right now, another thing I've been saying to y'all is, as I know that this is a picture perfect bullish order block, right? This is gorgeous, as everything we want to see out of a bullish order block. But contextually, I've been vocal about saying I don't think this order block will take us to new highs. I think that we're going to eventually trade through this order block. I've been saying that even when we were rallying, even when we rallied the second time, I've been saying the same thing. I think that we're going to trade under this order block. We will see, because once again, it is a nice order block, and technically on this daily chart, we are bullish on the daily chart when it comes to its external structure. So I understand that technically we could go to the upside, but for other reasons, I think it's not going to work. So we'll see if that plays out. For the most part, we have been consolidating, and we'll see what comes next. But I'm still bearish on this. All right, so that's DXY's mood. Now, I'll check the chat real quick. Y'all funny in the chat. That large candle may confirm your sentiment. Yeah, man. I think it looks bearish to me. It does look bearish to me. That OB was used already. Nah, well, if you're talking about when it tapped into it initially, you could say that it was used in this regard, but it didn't do what it's supposed to do. So I wouldn't consider it used. It's still, it can still be used. Do I think it will be used? No, I think we're gonna trade under it. But being that it didn't at least get us to running these highs right here, at least run these highs, and nah, it's still in the stage where, you know, we could turn around any second and start running to the upside. You feel what I'm saying? So we got to be careful. But once again, I do think we're gonna trade under it, and the order block is these two red candles here. That's what I've highlighted, is those two red candles as the OB. It's definitely not looking so good so far. Now, why it says 3 black crows? Yeah, I don't trade candlestick patterns. You'll see largely that my style of trading is very different from candlestick patterns. I don't do chart patterns. I don't do anything of that nature. But definitely keep your mind open, because I used to trade those things, and then when I got exposed to the style that I trade now, I completely changed over. And I also suggest you check out the testimonials that I provided, not only on my Instagram and my pinned post on my Instagram, but also on YouTube. Last week, I dropped a video for my mentees, and both of those testimonial things, and that's 2 separate groups. And both of those testimonial surveys I gave to 2 separate groups of people. They all, when I say 100%, they 100%, not 99, all said that they would never go back to the old style of trading, which is chart patterns and candlestick patterns and indicators and stuff. They all said that the style that we trade now, they would never go back. This is the style they want to trade with for the rest of their life. Right? We got Mincy in the chat right now saying never ever. They would never go back. So, you know, I used to trade 3 back close, and once again, there's people that are profitable with it, right? So I'm not gonna knock it. I'm just saying that keep your mind open, because you might, you know, you might never touch that stuff again. Y'all can see it in the chat right now. He said they never leave it. So word.
You know, I had a joke, right?
Hold on for it, big go. Hold on for it. Only because it's on recording. I gotta get this on YouTube. I gotta get this on YouTube. That's the only reason. But I got y'all. I appreciate y'all in the chat. Randy talking about it and everything. So word. So that's DXY. Now let's take lessons from last week. Before I tell y'all what I think is gonna happen this week, let's talk about some gems we could take from last week, and I'm gonna do it through Friday's price action. Just any tips that we could get for our future trades. So just know for DXY, once again, I have an expectation to the downside. So you can already tell I probably lean bullishly on the NASDAQ and the S&P 500. And yes, I do, but I'll explain why after we talk about last week. So let's take some gems from last week's price action. All right, so here we are on NASDAQ. And if you're an options trader and you trade QQQ, guess what? I do too. I trade futures and I trade options. And guess what? I only chart on futures charts. And I suggest you do the same. And people wonder, yo, how do you get in plays at 9:30 a.m.? Because I'm looking at a futures chart. Futures been going on for hours. Like, it's like, to me, 9:30 is just another candle. It's not like the first candle of the day. And that's the beauty of it. And even when I'm trading options, I'll buy QQQ calls at the same time I'm buying NASDAQ buys. You feel what I'm saying? So just keep that in mind, y'all. So here we are on this futures chart for the NASDAQ, your QQQ equivalent. And last week we were very vocal about expecting downside, and it delivered to all our targets. And now here we come to Friday's price action. So on Friday, when the news came out on Friday, I said, my fault, before the news came out on Friday, I said, hey, we're not leaving bearish signatures. But my mentees know that we were bearish until ES touched the weekly BTSMC. So you have to watch both charts. So prior to the news dropping, ES did not touch this purple area. And this is a buy side imbalance, sell side inefficiency. This is a bullish fair value gap. And I'm actually gonna most likely release a video this week just explaining what a fair value gap is for people, because obviously I can see that's a big part of my trading. My only warning is if you try to learn fair value gaps elsewhere, just
I heard you
hold on. Y'all gotta make sure y'all on mute. Y'all gotta make sure y'all on mute. Be careful. So my only recommendation is if you ever try to learn fair value gaps elsewhere, be careful. There's a lot of incorrect teaching on it. There's a lot of people that don't know what they're talking about. I promise you. And also there's fair value gaps all over the market. So if you try to take trades on them, I can bet money that you're gonna lose money. Real talk. Until you get the proper teaching on it. Then you realize like, oh nah, this is the most powerful tool in the market. Real talk. You just gotta learn it from the right source, which is minority of people really understand how to trade fair value gaps. You know what I mean? But I show people every day that I know what I'm talking about fair value gaps. I mean, look at the fair value gap we targeted. This is the fair value gap we targeted, and look what type of reaction we got out of it just now. As this, like clearly I know which ones are relevant in price action. All right, so anywho, let's keep it moving. So basically we are bearish until ES touches the purple area. ES didn't touch this purple area until 12 o'clock on the dot. And when I say on the dot, I legitimately mean on the dot. Like we did not touch this purple area until 12 o'clock. So this green candle, you see this green wick that touched it initially? When we finally got there, this is the 12 o'clock candle. It just touched it at 12, which is when I exited my shorts, especially because when we touched it, you see we actually had a green reaction. So I was like, I already know what could potentially happen. Yeah, I took profit on my shorts right there. All right, and then it dropped a little more. Yes, cool. But then we see what happened eventually. It ran crazy. So that is that. So until we hit that area, we're bearish. Keep that in mind. So being that we already got direction from the higher time frame and lunchtime macro, yeah, of course, because time and price is the concept, you know. So which any lunch macro I'm playing is going to be from 11:50 to 12:10. So even seeing it touch at 12 on the dot, it fits right into that macro. But YSA, no, that wouldn't cover that at all. But any questions regarding any products on my website and stuff, I'm gonna answer after I finish recording. So right now I'm about to just go off. I'm about to just start teaching, and then all y'all questions, I'm gonna address those after the recording. So I'm about to just start straight teaching right now. And if I forget to answer your question, please ask it again. Don't let me forget. When the recording is over, I'm going ham on questions in here. All right? Yeah, no problem. No problem. So let's get it, y'all. So straight teaching right now. So we're bullish only for the news event because of what I said, signatures. Remember, there is a way that we deliver bearishly and there's a way that we deliver bullishly. Y'all seen the screenshot of me telling my mentees, yeah, we're not leaving bearish signatures. Then the news event happens, and then this, you see this come out. When the news event happens, this is what happened. This reaction, boom. This is a news event right here, PCE, just as big as CPI. You see this reaction. But were we bullish on the day? No. I told you that we were bearish on the day until ES went down to touch that weekly fair value gap. So when I see a bullish reaction that was expected, that's an opportunity. That's an opportunity to go short. So what do you think we did? We went short. So first you have to ask yourself, okay, if we're going to trade to the upside first, what are we trading for? Yeah, I can see I highlighted this hourly bearish OB. And a tip for you is, my people, listen, if you're bearish things will work until you get to your target. So being that we're still bearish, we have not gotten to our target yet. When you have a bearish order block like this, guess what's going to work for you? That bearish order block. And once again, when it comes to incorrect teaching that you see out there, some people will tell you that an order block is just this candle up here, because they can say, oh, it's the last candle before the move. No, stop listening to people that don't know what they're talking about. It's really frustrating because people come to my one-on-ones with misinformation. The bearish order block is not just the candle up here. It's consecutive green candles, right? So a bearish order block will be all three of these candles. Why? Because they're consecutive. Now imagine it looked like this. Imagine it was a green candle right here, a red one, and then another green one. Then people are justified to take this because it's not consecutive. But if it's all three in a row, oh yeah, all three, that is the order block. So you have to highlight this whole area. And then that's like, oh man, that's a wide area to try to take rejections on. Yes, that's why we don't just one, enter a play when we get into the area. Two, if you take my masterclass, please don't say it in here. I don't want anybody saying it in the chat, but you guys may know the very specific places where you expect the reaction out of the order block. We're very specific. So even when the area is this large, there's a certain spot in this order block where I already know it's going to fail. All right. In this example, everything held exactly where we were wanted to reject. And no, it's not as simple as saying the 50% of the order block. So if you're thinking, oh, he's talking about mean threshold, he's talking about the 50%. I'm not just talking about the 50%. No, there's a different signature I'm getting at with this. But regardless, we're in the area where we want rejections. Clearly, we got rejections. All right, so how do we also know to go short? So not only are we in a higher time frame, bearish POI, meaning an area where we want rejections from the higher time frame, but you need the lower time frames to confirm it. So just talking about signatures once again, this 5-minute green candle is an area that we would expect bounces from if we are bullish. And specifically in this context, we want it to hold in the upper 50%. So I'm watching this area like a hook. So when I see price come down here, I already know, oh yeah, it's over. We're about to die, which I already knew he was gonna die, right? That was the projection given on this day. But guess what? Anybody could get it wrong. So to make sure, I still need confirmation. Seeing us close under this 5-minute fair value gap was confirmation to me that we're gonna make new lows today. So we killed all the overnight price action. We killed all of this in this one move. And then we obviously just super died. So that's how we catch the bearish move. And as far as entries go, it's light like this, right? Once we close under here, we're waiting for price to give us an entry that we like. Now, for me personally, I trade off the 15-second largely. So when we have this initial rally, I'm waiting for price to give me signature that is going to move back to the downside, and then I'll take my shot at price action. So I'm using the 15-second in here. This is the 1 minute. But I'm using the 15-second. Even as far as the 1 minute goes, if you're not a 15-second trader, if you don't know how to look at that, you can anticipate that we're going to be going short once price closed under this green wick right here. And it has to do with this fair value gap to the left. And that's all I'll say on that. All right, so once price closed under this green wick, especially if you're simultaneously making a SIBI or a bearish fair value gap simultaneously to invalidating the bullish fair value gap, that's bearish sentiment. So you have a bearish fair value gap trading on top of a bullish fair value gap that's in an area where you're already bearish. Oh yeah, that's a good signal to go to the downside. So even when we get in as this trades under it, you could have a stop loss where, I want you to answer that in your head. If you got in right here, right there, right, where would your stop loss be in your head? Now, where some people are saying, oh, on top of this high. I'm not saying that's wrong per se, but based on what I want to see, my stop loss is actually, my fault. My stop loss is actually right there. Why? Because when this candle closes, I need the next candle to open up and not touch the low of that red candle, because that would prevent the ability to create a bearish fair value gap. Right now, in this exact area, I want to see a bearish fair value gap. So a lot of my entries and my entry strategies is based on the creation of fair value gaps, and I'm getting in anticipating that. So my stop losses are very close. So just think, if I'm getting in, let's say at 16,607, and my stop loss is at 16,615, it's an 8-point stop loss. And mind you, this is the 1 minute time frame. Could you imagine the fact that I do this on the 15-second? I'm not saying that because of myself. I'm saying this like me, my mentees, anybody that knows what we do. We do this on the 15-second. So it wouldn't even be 8 points because price is fractal. So these same things, these same type of setups occur on the 15-second. So it's the same thing. So now it might be a 4-point stop loss or something of that nature. I wonder what it looked like on the 15 here if we could. All right, so same thing. You got to run over buy side. which is what we want to see before we make any type of move. Okay, we got to run over buy side. Now for me, I'm looking at the same thing. What did I say? The invalidation of this fair value gap. So I'm looking to see price invalidate that. We already knew it would invalidate that once we seen this wick come this low. On Instagram Live last week, I gave away one of the signatures, which was about a smart money trap that occurs when we trade this far under a fair value gap. Now, I'm not gonna like say it again because that's honestly a signature I should be giving my mentorship, but I gave it on Instagram Live for free. So I say that to say definitely tap in because you never know when we just gonna be revealing it's just for the culture. So there we go. We knew we was gonna fail based on this already. Now we trade down and you're taking the same entry strategies. If you want, you could even take it down here. Like you don't have to even like be a sniper. You could take it down here because you're already bearish. So you could take it down here if you want to. Your stop losses are always closed. And then at this point, you're just riding the trend. You know, you're just riding the trend. And the beauty of charting from the higher time frame, here's the beauty of it, my people. The beauty of charting from a higher time frame is that you have higher time frame targets. So I want you to think about the fact that you're getting in somewhere in this area, let's say at 16,605, and a safe conservative target for you is all the way down here at 16,485. That's already 120 points. This is already 120 points just to run the last lows. You just already caught 120 points. Think about that. On NASDAQ, I know not everybody trades futures, but that's a heck of a lot of money. I'm gonna just say that. Or NASDAQ. And if you're trading minis, it's $20 per point. So 120 times 20, do the math on it, you know, and that's with one contract. If you do it with two, if you do it with 3, 4, 5, y'all can see how people can have crazy paydays. So if you have higher time frame entries, you have higher time frame targets, that's a hell of a lot of money. Understand what I'm saying? And that's why we chart from the higher time frame, but we enter from the lower. So to recap that, what I'm saying is this. I know I just said a lot because there's a lot that be going on. You know, I'm trying to talk to everybody. I know some people are following me fluently and some people are like, what the heck is this guy talking about? So let me recap briefly. We started the day bearish in our head. We already know that's supposed to be bearish today based on projections given days before. This is nothing new. On Instagram Live, I told you where we was going this week. So we already know we're bearish. So when the news comes out and it's bullish news, we know that's going to be faded to the downside. We already know that's a fake move. So we're looking for price to give us signs that it's going to trade back to the downside. All right. Now, when price moves up and then it gives us signatures that is ready to trade back to the downside, this is an opportunity for you to go short. So you need to have those signatures and price action that tell you, hey, you know, when we're bullish, typically we wouldn't violate this area, or when we're bullish, oh, we wouldn't come back under this white line or something like that. Now, of course, those signatures are everything that I live and die on, and those are the things that I teach. So yeah, of course, that's what we'll be going over if you join the mentorship and stuff. And I've already shared some signatures even in the free community, so I don't hold all of them back. But I'm just saying, once you have like certain signatures, you can get in moves early. So I know some people have heard of market structure. Some of y'all have heard of market structure and y'all say, hey, you know, I'm gonna take shorts if we, you know, have a change of character or something like that. For you to go short on this play, if you're a market structure trader, you would have to wait for price to close under this red candle. This is when you just realized that we was bearish. Bruh, we already made 120 points worth by the time you realize that we bearish, and then you're supposed to be taking the next lower high. Let me know if there was ever another lower high. What, you gonna take this green candle? Bro, you just now getting into play at the tail end of the play when we've been short. And that's why, one, I don't teach market structure past class 1 because it's a foundation, but then we move on from it. But there's a level of precision you can get in the market without even having to understand breaking structure, change of character and stuff. And I'm just putting out onto that. Like I said, we already had ways of going short. We already knew we was bearish before you ever got a market structure shift down here. Understand? So that's for that. So we pushed down, and I want you to notice what bearish price delivery looks like, even from a 1 minute time frame. Even if you watch your trade on a 1 minute, that's what I mean. And you said, did I enter the puts on the 15-second chart for this example? Yeah. I ain't gonna lie, like I would say 95% of my entries is gonna be on a 15-second chart because I'm gonna get back to that sentence. Let me just say this before I forget it. You guys notice that when we're bearish, everything bearish holds. Like Like, just think about it. We come up, we make a lower high, lower low, lower high, lower low, lower high, lower low. Everything is holding in bearish price action. Even this move right here, let's say you got spooked out by the fact that we closed above this high. Look at this high right here. Even if you got spooked out by the fact that we closed above it, if you look at certain signatures you have in price action, it'll tell you if it's a real move or not. So when this move happens, price should not come under, I'm gonna just highlight this area. So if you initially like, man, dang, the move is over, but then you notice we closed back under this purple area, bro, we about to trade to the downside real heavy, real heavy. You know what I'm saying? Real heavy. So it's like, that's a signature in itself. So once you see price come back under here, it's like, oh, we still bearish. This was just a liquidity sweep. Back, we keep moving. Keep moving. Notice that it is lower highs, lower lows. You have no reason to sell anything right now. This is the easiest hold of all time. Like that hold on Friday is the easiest hold of all time. Everything was just super simple. You can't panic when price has little retracements. What are you panicking for? Understand? There's nothing to panic for, because price can't move in one straight line, even though this kind of looks like it. But it's like when it trades up, it's trading up for a very specific reason. This move right here is to stop out anybody who's trailing the move. So they stopped out some people right here and then kept it going. That's all this is. This is a very, very simple hold. And if you understand the signatures that I'm talking about, once again, you'll know when the reversal is actually coming. All right. So that's for one. And how do I know to hold NASDAQ? Because when I trade, y'all, I trade like this. I just trade like this. So I had the other chart right next to it. So this is exactly how I traded on Friday. Like, I'm holding NASDAQ, I'm in QQQ at the same time, and I'm watching ES. And I literally, bro, like, I was just watching ES on a 5-minute, and I'm just waiting for ES to touch the freaking purple. Once it touched the purple at 12, I was done short in the market. I was like, I took my money for the day. I'm good. Great payday. You feel what I'm saying? So word. All right, so that's the NASDAQ, that's the ES, that's last week's price action. Cece said she hopped in the bars, not gonna lie. I ain't gonna lie, I did hop in bars too, but I was late to that move. I didn't snipe bars from the bottom. So here's the loss I took on Friday, which obviously was severely outweighed by my wins. So it was a very small loss, but here's a loss I took on Friday. So I told my mentees, I say, yo, as we know, this bullish fair value gap from the weekly on the SP 500 is extremely important. Everything is going to depend on what happens in this area. Everything is going to depend on this. Like, this is going to either send us to all-time highs, or if we close under this, bro, we come into new lows. There's no in between. So I was like, yo, we get it now low key. It's risky, but it'll be a huge payday, because you got to remember, this green candle wasn't here at the time. So at the time, you got to picture this with me. This is a whole huge red candle. So for me, man, I wish y'all could picture this with me, man. I want y'all to picture this real quick. There's a huge red candle right now touching the purple area. What I want to see is a potential bearish fair value gap getting created. So that means if I get in now and the next candle opens up and trades back to the downside, which will be Monday's candle, that means that there's now going to be a fair value gap right here that's bearish. Perfect. That's a line of defense for me. I'm also getting in, somewhere over here. So I'm like, all right, that's not a bad entry for a swing trade. So I took a swing trade in anticipation of a daily fair value gap being created. Now, that's risky as heck, but once price traded back to the upside and eliminated that trade idea, I got out of my shorts right away. Immediately got out of my shorts. I was like, oh yeah, never mind. Like, once we reacted this hard and came with this, I was like, yeah, never mind. So we cut that trade. The entry of the trade was inside of this consolidation. And then once we burst to the upside, I was like, all right, never mind. Because I seen what I had to see to know that we about to make a crazy run on price. So once we came out of here, I was like, all right, I already know what's up. Because if we was bearish, we would have traded back to the downside out of this consolidation. And why did I choose this consolidation? It's not because it was consolidating. It's because of something I teach in phase 2. So I really wish I could share it. For phase 2, you're in here as well. So for phase 2 people, I'm trying to talk to everybody at the same time. For phase 2 people, the reason I got in here had to do with the bias low. This was the bias low right there. So we was consolidating on the bias low. I'm like, all right, you know what I'm saying? We making new lows next. So once we burst to the upside, I was like, okay, never mind. Right? We're not gonna reject the bias low. So all right, never mind. The trade I did invalidated. Get out your shorts. And what you think I did? Once price was super bullish, I got in buys. So I caught this move. So I ended up eating on futures. I got the whole loss back on futures. The entire loss I took on the swing trade, I got it back on futures. So that's the thing. When you, just because you take a loss on one side don't mean you can't play the other side if the other side is playing out how you want it to. So I took off my bear goggles and I put on my bull goggles. Now, you just view this with bullish odds. If price is screaming at you right now, bursting out of here with a fair value gap, right? Using this continuation OB, pushing out with another fair value gap, the price is showing you that, yo, this is bullish. And then at that time, you're looking at ES and you already know that this is some clear buy side liquidity right here. So at this point, I'm like, okay, we're going to target these highs. That's why I took futures trades to run these highs. And then we super ran them, obviously. But once price is over here, we're this close to this target. I know we're going there next, especially with the way that we're reversing. So that's why I was able to scalp on the other side. So that's why don't just be like, oh man, I took a loss, I'm done. I'm like, you don't have to necessarily do that unless you're over trading, but if it's within your trading plan, there's opportunities on the other side. So overall, we ate on the downside, took a small loss right here, and then we ended up eating on some upside. That was Friday. But all right, so that's Friday's recap. Now let's talk about what we expect out of price action going forward. So that was DXY. Now let's take it to the bond ETF. All right, so back to sentiment. We're talking about what is coming this week. What is coming this week? Beautiful people. I've been showing y'all the 2-year treasury bond. And I said that when bond prices are trading up, there's an expectation that interest rates should be moving to the downside because they move inversely. When interest rates are moving down, that's good for the stock market. So in other words, when bond prices are higher, you expect the stock market to also be moving higher. So this is a leading indicator. The bond market has been moving before the stock market moves. So I use this as an indication of what could potentially come next. So what I noticed here is this. We came to, oh man, I don't think y'all see it. I don't think y'all see it. We came to the lowest body of this swing point, and then we've been rallying ever since. So those who've been following me for a while know I'm vocal about price coming to the lowest body of swing points. I know we always want sell side liquidity. You might have wanted this wick. You might have wanted price to run under this wick. It didn't run that. It doesn't have to. It doesn't have to. This is a target in itself. Watch what price does after it runs swing points. It may run the wicks, but it don't have to. So here's a time where price comes to the lowest body, pushes out. So notice that this green candle is Thursday. So I'm okay, Thursday is a green candle. There's no fair value gaps here to reject. Okay, well, price is coming back to this fair value gap next. So even seeing this on Friday was like, oh, wow, that's very interesting how this is moving bullishly. And the stock market is looking bearish right now. That's sus to me because, once again, the bonds typically lead. So when I see the bonds trading higher, I'm like, yo, the stock market does have potential to move up from here. That's strange. We didn't want to run the wick. We didn't want to run past the wick. We met an objective. We ran to the lowest body of the swing point. You know what I'm saying? Lowest body of the swing point. That's all price wanted. That's all it wanted. So you got to listen to what price is telling you. Now look how I push up out of here. Don't just look extremely bullish to you. The way it pushed up out of that area, look at the hourly. This is good. This look real good. This is good money. So yeah, and this is what we talked about in class. Back to my mentees, this is what we talked about in class. We talked about price coming back to this fair value gap area. And what I said was, if we close over this fair value gap, then I'm bullish on bonds. So now we're here. We're inside of this fair value gap. There's still a chance we can reject it. Do I think we will? No. I think we're going to trade past it, and we're going to end up targeting these highs up here. We already engineered liquidity here. I think we're coming for that buy side next. But a lot has to develop in price action before we get there. So we're going to take it day by day, step by step. But my projection is that this moves to the upside. But we'll see. We would need I don't want to see, my fault. I do want to see a bullish fair value gap right here. If we can make a bullish fair value gap right here, I'll be very convinced that, okay, we're probably going to start moving to the upside. So this upcoming candle right now is still forming. It's still forming. This candle right here is very important on the daily. So why is that important to us? Because if the bonds are potentially bullish, then that would tell me that the stock market should continue bullishly. So that's for one. And I talked about DXY. I'm bearish on it. So that's also something that's bullish for the stock market. Cool. Keep that in mind. Now, I'll come back to the Forex tickets for my Forex traders in here. Let's go to the SP 500 right quick. All right, for the SP 500, I thought that it was interesting how the push that we made on Friday allowed us to close over Friday's highs. So Friday's highs is this green wick. This green wick right here is Friday's highs. That push at the end of the day, in the last hour of the market, that push took us above Friday's highs. Now peep NASDAQ. NASDAQ Friday's highs was this green wick that rejected the OB. Remember the OB I went short on? See that bearish order block I went short on? That was the high of the day on Friday. We never ran Friday's highs. So I want to see a push to run Friday's highs early in the week. I do want to see us do that so we can get in line with the SP 500 is doing. But just keep that in mind. Only one of them ran Friday's highs. The other one actually stayed in respect of it. So for ES, we're coming out of this weekly busy. I do believe that we're going to continue to trade to the upside. I'm looking for us to come back into this wick, but ultimately run that wick. So I'm bullish on this going forward. It'll be lovely if we can make a bullish fair value gap here, but ultimately, I don't think we will. I think we're going to trade down first, either to this yellow line right here or the yellow line below it. I don't want to see it go under this yellow line per se, though. I don't really want to see it go under this yellow line. So as long as it kind of stays in these areas right here, then I'm going to remain bullish on it. If it comes under this yellow line, which if you can't see it, the bottom yellow line is at 5,252.75. If it comes under there, then am I bearish? No, but I'm also not bullish. I would be kind of on an in-between spot. So we're going to watch price. But if price stays anywhere in this area or above, then I remain bullish on the SP 500, right? So that's for that. Be looking for more upside here. On NASDAQ, same vibe. I'm looking for NASDAQ to trade down first. Trade down first before trading up. But ultimately, I am bullish on them as well. Understand? Bullish on them as well. And so, I would want to see respect to this fair value gap. We're already respecting it so far, but I'm not necessarily convinced. I wouldn't be surprised to see price like come down and then move back up. I wouldn't be surprised to see that. But either way, I am bullish on this ticker as well. So coming into the Dow Jones, beautiful people. What do we say about the lowest body? So mentees, do y'all remember in class mentees, me saying, hey, the next target for the Dow Jones, we're going to take it to the weekly lowest body because that's a safe target. Then we're going to watch how we trade inside of this wick area. We came to the weekly lowest body and yo, mentees, that was the low of the week. Geez, look what happened when we touched that. Sheesh. Look how we consolidated on the lowest body of the weekly and then we took the freak off. We took off on the Dow Jones after having such a bearish week on them. So that target we had was the bottom. That was legit the bottom so far. And I'm looking to see some continuation to the upside. Now, obviously, if we come back under these lows, then I'm targeting the lows of this wick. So if we come under these lows, we're going to run the wick for sure. But I don't think we're going to come back under here. I have a bullish expectation on the Dow Jones right now. I'm expecting the Dow to move higher. And I think ultimately it's going to end up running all-time highs. So I think we're back on a journey to the upside right now when it comes to the Dow Jones. Yeah, they went crazy for facts. They definitely went crazy. I don't want to see price come back under this fair value gap. I don't even think it's going to trade down that far in the first place. But if it does trade down this far, I would believe that we're going to run these lows. So I would want to see us respect this fair value gap. The higher in the fair value gap that we respect it, the better. So if we could just respect it up here, that's good. I don't even want it coming down here in the lower half of it, but ultimately it could hold it. And if you remember what I said about NASDAQ and S&P 500, I'm expecting them to move down first before moving up this week. So that could be the Dow Jones is making the same move to the downside first before moving back to the other side. So this is the Dow Jones right here. My expectation is bullish. I stay bullish on that. Now, while everybody was dying last week, quietly, the Russell was moving up. Look at Thursday's candle, look at Friday's candle. And then shoot, even today's candle that just opened up like an hour and a half ago. This candle has been green so far, but obviously take that with a grain of salt. It's been an hour and a half. But on this daily chart, guess what we've been holding, y'all? We've been holding that weekly BTSMC. Look at it. This is the weekly BTSMC we was talking about. Say, yo, for the Russell, I expect us to hold this so we could run out these highs right here. You see these highs at 2,166? That's still my expectation. I'm expecting us to hold this area so we can run those highs. So even though everybody was so bullish, bearish, the NASDAQ was bearish, the S&P 500 was bearish, the Dow Jones was bearish last week, the Russell literally just held this area that we wanted to hold. It held it, and now it's moving back to the upside. So let's go to smaller time frames. Notice this. It comes out of the weekly BTSMC. On the 4 hour, you see that it retraced into this 4 hour BTSMC, pushed up. Cool. Came back into it, pushed up again. Interesting. Now you see this hourly BTSMC right here. I don't want to see price violate this BTSMC right here. I don't want to see price come back under that. And specifically, I would love to see price hold the upper half of this BTSMC to move higher. Now, right now, it's moving higher without it, which is even better. I'm just getting us prepared for any potential retracements. If it wants to just go right now, go ahead. Hey, I ain't gonna stop you. Good, we're bullish anyways. But if it happens to retrace, I will want it to hold the upper half of this hourly bullish fair value gap so we can move to the upside. All right, but either way, the Russell continues to deliver on the bullish side, and I believe that we will stay bullish on the Russell as where price is right now. Now here on copper, for people who trade copper, we saw the rejection at this fair value gap. We were trying to see what price would do when it got here. It ended up rejecting it, and then it made what? Another fair value gap. So what's the lesson from that? True bearish sentiment is when not only do you use a fair value gap, but after you use it, you make another one. So we used it, and we made another one, which is this purple area. This is the one we made. So now that we have that, that is a line of defense for the bears. So for my bears in the room on copper, we need to see how price trades inside of this area. If it retraces there, if it retraces, we want to see it retrace and reject. If it closes above it, it's not a great sign. If it closes above it, I would target this same fair value gap above. If it closes above it, I would target the blue area. All right, so it's an if-then statement. If we reject this, it's coming back to new lows. If we close above it, I'll be targeting those highs on copper. But we said copper is getting ready for a big move to the downside, and guess what? It made a big move to the downside, so it's been delivering. Let's move to oil. CL, man, doing what CL do. What we said last week, y'all? What did we say last week, and what lesson did we take from it? Okay, let's take you through last week so we really have an understanding of what happened, because once again, it's about us becoming better traders, not just finding fire plays, but like we need to make this repeatable. Make this repeatable. So here, actually, let's start from right here, because I remember it was really like this. Okay, so this is a Thursday candle, and then we see Friday did this. So what happened on Friday, May 24th was, out of this consolidation, we have lows right here. You see these lows in the middle? Look what Friday did. It came and it swept those lows, and then it pushed hard to the upside. Look at this push. Really nice push out of those lows, right? Cool. So when that happened, I then said on the watch list that we had, I said, hey, my next target for the oil stock for CL is for oil futures is for CL to come to these highs next. And then we're gonna see what it does when it gets to those highs. Boom. We got that one day. That's fire, right? That's great. Great move. What was the next thing we said? So here is Tuesday. I had an Instagram live on Tuesday. What was Instagram live's analysis? We said, all right, being that we're actually at the top of this consolidation again, when we break consolidation, we want to break that with a fair value gap. So we want to see if the upcoming candle can make a fair value gap or not, meaning it needs to open up. I don't even want it to trade down too much, bro. This thing got to open up real sensitively to the downside and move higher right away. like right away, bro, because I want to make a fair value gap just like that. Just like that. All right, cool. What happens? What happens the next day? This. So one may say, oh, yo, but bro, we made a fair value gap. Look, you're right. We did make one. But this is a signature in itself. Mentees know what I'm talking about. There's a signature here that tells us, okay, we're coming back to these lows. At least the lowest body, but either way, we not finna use this fair value gap. Do I say this after the fact or do I say this before the fact? Because now this is Wednesday. Guess what? I had live again on Wednesday. I had an Instagram live on Wednesday. I say, yo, based on what CL did today, ignore this fair value gap that it just created. Ain't that crazy, right? Ignore that fair value gap. Even though on YouTube, they're going to tell you, yo, it's a bullish fair value gap. So when price comes to it, it's supposed to use it and go higher. No, be careful. That's what I'm trying to tell y'all. You have to know what's relevant and what's not. This is a fair value gap we don't want to use. So that's why price came the next day and closed under it. We're not worried about that. We're coming to those lows next. We get there. We got to the lows. And now we want to see if we could potentially continue and come to March's lows. So my analysis here on CL is I'm still looking to see us break this consolidation. I would love to break it with a fair value gap. So if we're going to be bearish today / tomorrow, right, we need it to be a red candle closing under those lows. And I want to make a fair value gap. But either way, I still am targeting March lows now. Because we didn't put a fair value gap on these highs, my downside target remains the lows of the monthly candle in March, which is this green wick right here. This green wick, that's March's lows on a monthly chart. So that's just a target right now. Obviously, if you got in from the top, congrats, you're making good money. But right now the expectation is to come to the yellow line. But it all depends on what we do when we get to these lows. So it's the same story over and over. How are we gonna treat these lows? Do we even get there? Because as we know, price sometimes just targets the lowest body. So it might have already hit its downside target, and this thing might turn back around and move back to the upside. So you have to be careful that I would only get involved if we actually lose those lows, and we have to lose it in a certain manner for me to really get involved. And then we have a target, and then we may see where it wants to go next. But always be careful trading a consolidation because it's not safe. It's not easy. All right. Now here on gold, what was gold's expectation? Exactly what this arrow said. We said daily bodies should hold under 50% of this daily SIBI here, right? What did price do? It came, held under 50%, and we want to see it reject so it could take us to this purple area, which is the weekly BTSMC, by the way. If you don't know what the purple area was, it was the weekly BTSMC. This thing is actually supposed to be right here. So let me be specific, because this thing, when you mess around with the B adjust thing, it be messing up the chart. So notice how when I press B adjust, this purple area slides up. When I press it again, it slides back down. So you got to be careful messing around with B adjust. But so this was messed up. But my target right here on gold is the lowest body on the weekly. All right, so a safe target is the lowest body on the weekly on gold, and may go and get that freaking overnight. We already so close to it. But this was the expectation. Reject this fair value gap so we could come to the lowest body on the weekly. So gold, I remain bearish on, because it's doing exactly what we wanted to do, rejecting this area to come to the downside. This part of the move, I expect to be energetic. I don't expect us to stagger there. I expect us to get pretty bearish to get at least to that target that I just put down there. It should be like a quick move. I don't expect it to like be short candles. I expect a pretty big candle getting there right now. So we'll see. And I say that, by the way, because when you're close to liquidity, what you will want to see is a fast movement to that liquidity. You don't want to see price stagger there or like take its time. No, when it starts doing that, if anything, that's a very bad sign. Get ready for a reversal. So here, let's go to our options ticker. Let's go to SPY. What did I want to say on our SPY that I didn't say on the SP 500? I think it's just the same vibe. I don't remember. Yeah, like we holding these inefficiencies, but looking to take all-time highs again. I already gave these targets to y'all, but if you missed it, I still have SPY going to 539.98, 540 basically, and then 555. All right, so those are like two targets I have for the upside on SPY, especially because it's showing that it's holding bullish things. You know, we held the VI, we held the BTSMC, everything looks good to take it to the next two targets above. So that's SPY. On the Qs, same vibe. We have 467 and we got 485. Now, QQQ, I don't want to see it come under 447 this week. I don't want to see QQQ come under 447 this week. Ideally. I'm not saying I'm bearish if it does, but I would say that I remain bullish if it does not. So I just want you to know the difference. All right, I'll say that one more quick time. I'm not bearish if it touches that, but for me to be bullish, I don't want it to touch that. There's really a difference in those two statements. So I hope you hear that clearly. All right, because sometimes basically you can have no draw. You can either not be bullish or bearish. You kind of just waiting to see more. Right now, I'm actually bullish for real. Like I'm legit bullish on the QQQ. As long as we stay above 447, then I have an expectation we're gonna run out these highs next. Okay, so that's all I'm trying to say. Now IWM, same thing as the Russell when it comes to futures. We held that same weekly fair value gap. This is just the options version of it. This is what we wanted to hold. Everything did what it's supposed to do. I'm still looking to see us run these highs here at 209. That's the next target for me on the Russell. And then what other tickets do we have on here? Coinbase. What can we learn from Coinbase? There's another learning moment. Let's talk this gem here. So peep how Coinbase, this whole black area that I highlighted, look, this. So notice that I highlighted this consolidation. We always talk about not trading in a range, and then we talk about, hey, when price wants to leave a range, it should leave it with fair value gaps. So this happened on this day. Look how it's leaving a black area. Ain't that amazing? We love that. What's important for it to happen the next day? And I said this on live. Look, this is Tuesday's candle. What did I say on live? I said, okay, Wednesday's candle, we need Wednesday to make a fair value gap. Dang, look at Wednesday. Nope, no fair value gap created. So when we met on Wednesday, because I had live the very next day, bro. When we met on Wednesday, where did I say price is going? I said the next place price is going is back to this BTSMC. Because that didn't happen, it's going back to the BTSMC. Why? Because it's not ready to break this consolidation yet. So a lot of times when you're not ready to break consolidation, you'll come back to 50% of the range, which is right inside this fair value gap, which is the inefficiency for price to address. So look what happened. We came right back to that BTSMC, same one that we initially bounced on, this is another bounce that we talked about in class, by the way. We talked about this bounce happening, but obviously it didn't hold. We came back to the same fair value gap. And so ultimately, as far as Coinbase goes, I would say it's not a trade zone. I wouldn't want you to trade inside of this. You know, I told y'all that I got into Coinbase down here for shares. I actually sold my shares once this happened. Once this happened, this little ordeal in here, I was like, nah. So once we failed to run over this green wick and then we came back into the range like this, I got out. So my coin shares, I took my profits right there. A little profit getting it down here, taking it up here, but like I wanted it to like get up out of there. If I start seeing it turn back around, like let's say it uses this fair value gap and pushes higher and leaves this range with more fair value gaps, then I might get back in and ride it to all-time highs. But for now, nah. I don't want to be stuck inside of this consolidation because y'all know how that go. We got a lot of sell side down here. There's always a potential we could come right back to run out the sell side liquidity before anything else. So I don't even want to touch this consolidation. That's why I got out of my coin buys. Just to let y'all know. What else? There's a couple more I wanted to show before I wrap that. So Netflix, we talked about us using this fair value gap. We used it, came back, using it again. We'll see what happens next. Be careful trading and consolidation. Nvidia. All right, y'all know this was the earnings drawing that we made. We wanted price to use this green area to move to not only all-time highs, but we wanted to come to this first target, and then this is the second target. I still believe we're gonna run to the second target. We came very close to it, obviously. And by the way, I know some of y'all are new, but all these things were here before earnings. All these yellow lines, the green, all that, the arrow, all of this stuff is before earnings. So now I'm still looking for us to come into that last target. So I think we may use this gap to push higher. So I wouldn't be surprised to see Nvidia have a green day tomorrow, or in other words, just basically not really close under this gap. Now, if it happens, it happens. It's dangerous to be trading Nvidia up here anyways, but I think that if we start showing some bullish sentiment to the upside and we run those targets, we run these highs right here, then I think it's definitely going to hit the 1179 target. So Nvidia, regardless, you know, if you took swings out of this, then you printing right now. And shout out to you. Snow did it. We was super bearish on Snow last week, and golly, did it not play out? I hope somebody took the Snow shorts we talked about on the watch list. I hope y'all did, because golly, Snow looked good and it delivered last week. It looked great and it definitely delivered. It didn't even use this fair value gap, which is what we wanted to see. We didn't want to see that used, and it just kept dying. Like, bruh, this thing just died off. Beautiful. So that's for Snow. And yeah, last couple things I say here is Euro. I'm still looking for Euro to trade higher. Still have this target. We came so close to it, consolidated. I'm still looking at this target. Nothing bearish has happened to tell me to not still be targeting that. British pound right here. I'm still looking for it to come to this buy side, the same one that we engineered. What did I tell y'all? I said, yo, we don't always run the liquidity right away. We got to engineer. Why? Because there's already people who have stop losses here. So why not go there, bait people into seeing this as a resistance level? Because everybody reads the same trading books, learning the same stuff over and over. Oh, 2-touch rule, 3-touch rule. If a line gets hit 3 times, it's a resistance level 2 times. So they sell that. So they rejected the same spot, come down, make you think that it's a real resistance. And then when they ready to take it, they're going to blast through, and they're going to blast through it hard. So you got to be in position for when they're ready to actually take that liquidity that they just engineered in that same spot. And so I think British pound is going to make a move to the upside to take that. So we'll see how that go. And then here on USD CAD, this looks surefire to come down and run these lows. I think this should be a pretty nice red candle coming out of this ticker. Pretty nice red candle to take these lows. This looks like the type of liquidity that gets taken pretty nicely. And if y'all remember what I said on CPI, how do we know CPI was going to be an aggressive day last CPI to the upside? Because this is what we called on Instagram Live. We knew that because of the type of liquidity that existed to the left. Because of the type of liquidity that exists to the left, we knew CPI would be a big green day, getting you back to all-time highs, and y'all seen how that played out on the NASDAQ. So same thing I'm saying here on USD CAD. I believe that we could have a pretty big move to the downside here, and we'll see how that play. And the last ticker, besides Bitcoin, I guess, is same thing. I expect us some down moves. This is, we engineered mad sell side down here, and I'm just looking to see continuation to the downside. But be careful trading anywhere at lows. But either way, I am bearish on the ticker at least. Even if they play around at first, I remain bearish on it. And Bitcoin is the last thing I'll talk about here. So the infamous coin. What was the analysis? Last week, we wanted to see if we could use this bullish fair value gap to take us to all-time highs. If not, we have another line of defense with this red candle. If we don't use this red candle to move higher, what do we say we expect out of Bitcoin? Consolidation. If we don't use this red candle to move higher, and price did come under this yellow line like that, I expect consolidation on Bitcoin until its next major move. But so far, price is consolidating on that red candle. Bodies came under this fair value gap, so I'm going to erase it. I don't need that no more. I'm still just watching to see how we trade inside of here. This could be time distortion, and we'll see if we want to make a move back above all-time highs. But if we lose this red area, I don't have a draw on Bitcoin. I'm gonna stay put and let it do what it do, because Bitcoin does have a tendency to just kind of stay in place for a long time, kind of like this. So just be careful. But we did snipe the bottom of Bitcoin, because we talked about Bitcoin using this area to take us back to all-time highs. It's been a nice journey so far, and then we have some turbulence, which is not good, right? Because when you're next to all-time highs like that, you don't want to see turbulence. Sometimes that's a signal to you that you're going to trade back into a discount before maybe moving back up, or you could just get ultra bearish. So we don't like to see consolidation by obvious liquidity. That's not a good sign. But that's why I say, if we don't use this red candle to move higher, for me, I just think Bitcoin will end up kind of staying around here until something that's going to take us way higher again. All right. So that's really that. So I had to say about the coin. That's what I had to say about all these tickers. And if you just tuning into the channel for the first time, definitely subscribe to the channel. Definitely turn notifications on. We do this every week. We got different videos that come out that's just dropping source on YouTube. So you want to make sure that you're following. And yeah, join the free community. The link is in the description of the video. Join the free community. Follow me on Instagram. Everything is there. Join the mentorship where you break down every single thing you need to know. The mentorship is the one-stop shop for profitability. That's in the description as well. So with all that being said, as all she wrote,